CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Let's talk about the big story, the big corporate story, which of course the news came yesterday evening. Dixon Technologies, the stock had been rallying over the last couple of days and for good reason. Dixon told the market that they've onboarded Lenovo, the global IT hardware giant, for making IT products under the PLI-2 scheme. What does this mean for the company? What are the future opportunities? Saurabh Gupta is Chief Financial Officer at Dixon. He's joining us right now to take some questions. Saurabh, good morning. Great to have you with us here, and congratulations on this tie-up. So tell us, I mean, what's the size, scope of this partnership? Are we only talking laptops? What is the total addressable market, according to you? What is Lenovo's share currently? Just the basics first.
Yeah, if you look at the total Indian market in terms of volumes, the IT hardware is around 20-odd million units. And Lenovo pretty much has a 19% market share, both in laptop, notebooks, as well as tablets. I think so it's a large opportunity for us, and we think we'll be able to capture a large opportunity of this pie. So I think so for next financial year, we are looking to capture at least 10 to 15% of their volume requirements for the Indian market. My sense is year on year that numbers will continue to grow.
So just to get those numbers right, I have a figure of about $12 billion, which is the total addressable market for in India, right? You're saying Lenovo has a 20% market share here. Is that correct? So that's about $2.5 billion.
Yeah. So 12 billion is the total market size in terms of value. And only out of that, 25% is already manufactured in India, primarily to meet the government requirements. So almost 9 billion worth of IT hardware products were imported into India. Now with this PLI and also some kind of a restriction put in this category, this will really be a big import substitution game. And Lenovo is the second largest player in the Indian market. They have a 19% market share. So we think overall, in the next couple of years, it can become a large opportunity. Next financial year, because we'll also take around 4 to 5 months to set up these facilities for them. And so next financial year, we are hoping that we should be able to capture around 10 to 15% of the volumes. So
what
they
does
sell around...
what does that translate into? Go on.
Yeah, so they sell around 3.8 million units in India. So 20 billion market, 19% market share, and 10 to 15% for us for next financial year. In value terms, it can be somewhere around 1,500 to 1,600 odd crores. And apart from that, we're already manufacturing for Acer. So Acer also has a 10% market share. So for us, I think so these are the two large brands contributing almost 30% market share in Indian market. Yeah.
So Saurabh, in terms of number of units for the coming year, that's FY25, you'll be looking at around 400,000 units?
Yeah, so broadly around so laptops and tablets put together, it will be somewhere around 0.5, 0.6 million. And in addition to that, there'll be some volumes for Acer as well, which we are currently manufacturing it.
Okay, 5 lakh to 6 lakh, got it.
Okay, so just to take that point forward, 1,500 to 1,600 crores in value terms from Lenovo alone. From Acer, what is it in value terms in the first year? And then in FY25, 26, what are you looking at? Both from Lenovo and from Acer?
So Sonia, I think so it can be of 1,800 to 2,000 crore opportunity for next year. And then potentially 25, 26, it can be a 4,500 crore opportunity and majorly led by Lenovo.
So 4,500 crore opportunity, both Lenovo and Acer put together, but majorly led by Lenovo.
Yeah, that's right.
And okay, got that. 4,500 crores total IT hardware kind of opportunity in FY26 probably, right?
In FY26.
Okay. What is the size of the opportunity? I mean, once you're able to kind of, where will this grow up to? What's the peak opportunity from both these, as you see it, both these tie-ups?
Yeah, so the addressable opportunity is $9 billion, and assuming that 9 billion is at a retail level, so at a manufacturing level, you give some kind of a discount to it. So in next 4 to 5 years, it can be an opportunity worth 9 to 10,000 crores for us. So we really want to capture a large opportunity of this pie. And clearly, if you look at the government policy framework, the government policy decisions are clearly aligned towards making sure that these laptops and tablets are manufactured in India. And over a period of time, India attains a scale and size, generates that operating leverage, and potentially over the next couple of years, hopefully these laptops and tablets can be exported out of India.
Got it. All right. Saurabh, give us a few more details. First up, what will it be in terms of margins? Mobile phone margins is around 3% roughly as of the past quarter. So how do these margins compare with that? Point number one. And what is the total investment you'll be making as well to, the kind of numbers you're throwing up in terms of revenue potential is massive, but there'll be some investment, right? Quantify that.
Yeah, so what we have committed under the application, and recently we got an approval, we have committed an investment of 250 odd crores.
Yes.
And cumulative revenues of almost 48,000 crores over a period of 6 years starting next financial year. So these are the numbers that we're looking at.
And margins? Okay. How much better or will they be in line with the mobile division?
They should be in line, so broadly 2.8 to 3% kind of margins. But hopefully as the way the whole PLI scheme is structured, there is a commitment on backward integration. You get more incentive, the more backward integration you do. So my sense is over a period of next couple of years, if we are able to attain that operating leverage, get into some backward integration of say batteries, chargers, cabinets, display, I think so then there is a small potential for the margin expansion. But initially, I think so next couple of years, it will be broadly in the range of 2.8 to 3%.
Okay, so next couple of years, margins will be in 2.8 to 3%. On the revenue front, you had guided for 48,000 crores of revenue over the next 6 years, but that's really far out. So in the next couple of years, given that you have this huge $9 billion IT hardware addressable opportunity, what from this current, I think FY23 you ended with about 12,000 crores of revenues. Where will you end FY24? What are we looking at in terms of FY25 as well?
In terms of IT hardware, or you're talking about the overall?
The overall revenues.
Sonia, I would not like to give any number on any overall revenues, but clearly it will be a large number for us and basically led by mobile, where we have really got a lot of customers in the last 6 months. And my sense is in the next couple of years, IT hardware will become the second largest opportunity for us after mobiles. So clearly we are looking at a large growth and we will significantly outperforming the industry as well as our competitors in the next couple of years. So it'll be really a large growth for us.
Sure. Can you give us a number in terms of the smartphone business? You spoke about how you're in discussions with large global brands for the smartphones business, and a deal is expected to close by Q4 of this year. Can you just provide a little more color on that? What are we looking at in terms of the sizable opportunity?
So if you look at the total Indian market in terms of smartphones is around 150 odd million, and 70 million is the 2G and the feature phones basically. So combined, put together, now at Dixon, we have created a capacity of almost 85 million. So almost 1/3 of India's market kind of capacities we have created. And within that, I think so 30 million is a smartphone capacity and almost 55 million is a feature phones capacity. And hopefully by next financial year, we should be able to do almost 75 to 80% of our capacity that we have built. So clearly, mobile will be a large opportunity for us. And we have acquired some customers, for which ramp up and stabilization is happening right now. And some more customer acquisitions are in the pipeline, which will hopefully happen in Q4. And their execution will start somewhere in Q1 next financial year.
And when you utilize 75 to 80%, this will be a mix of both supply locally and exports as well.
So one of our anchor customers, we exports. And hopefully for other customers in the next 12, 15, 18 months, hopefully we should have some export orders from them as well.
Okay, just to go back to that Lenovo tie-up, will you get sort of knowledge sharing, a global kind of process know-how, etc.? I mean, does the agreement include that?
Yeah. So clearly, they will share those best practices on their know-how, technology, and clearly they have a way of working. So clearly, it will be a big learning for us. And that's how it has panned out in case of other verticals. So whether we had worked with Samsung or Xiaomi. So clearly there's a lot of learning which happens when you tie up with such a large player. And they're really looking at us as their extended arm. So clearly it's a big opportunity for us.
All right. Final couple of questions from my end then, Saurabh. Is there any exclusivity in this tie-up with Lenovo? Point number one. And also, when do we hear about Jio laptops?
So I don't know whether so as of now, they have selected us as the vendor. So my sense, it will be a combination of the imports, which will continue to happen for some more time. and they have selected us as the vendor for the manufacturing of laptops and tablets. I don't see there whether they have selected anybody else, so I'm not sure about the exclusivity angle right now. Jio, as of now, we are not in any kind of a discussion with them.
Okay, all the best. Thanks a lot for joining in. And this is a huge opportunity, right? You spoke about a $9 billion IT hardware opportunity that's getting imported into India, and you're going to be a big beneficiary of that. All the best. The stock is up about 3% odd. With that, it is a wrap on Bazaar. Chartbusters will come up in just a bit. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.